Hello everyone, it's me, NYSE Einstein from the floor of the New York Stock Exchange. Stop the madness. It's absolutely, this market never disappoints. What a fascinating day. We've traded basically the whole cycle of news, of stocks, of everything in one day with a 500 point, 450 point reversal on the market. You know, there was a point today, I have to admit, I've been telling you that it's been emotional selling and smart buying, that this market is firm, hold your ground. But there was a point today, and we've seen it 2 days in a row, where the scenario is sort of building, and the narrative is building in a negative way about global growth, about the consumer staples sector that's been sort of beaten down a lot, and that the fact that we've got a lot of headwinds. Earnings have been okay, revs have been okay, but the guidance going forward is questionable, and there are headwinds. China, we're not clear on that story. So there are things that are causing cracks in the infrastructure of this market, right? Economic data that's affecting it, raising interest rates. We are going to get some raised interest rates. Bonds are doing the bop and the weave and the dip and the that. But there is narrative that is pointing towards a fragility in the marketplace. So the last couple of days, we've seen big reversals. We've seen a morning negative narrative about all that I just discussed. Interest rates raising, global growth slowdown, inflation, raising interest rates, and guidance and problems going forward, especially if we don't know the clarity about the tariff and the trade problem, whether it's NAFTA, whether it's China, or what. Today, market was down 390 points, around 10:30. And I started even questioning my own postulates here. Well, maybe we're seeing this thing broke down below 24,000. It seems negative, and they were spinning that narrative over and over and over again. They were sitting there rubbing their beards like Einstein and going, this is, once again, we've got global growth problems. We've got interest rates raising. We've got bonds doing the bop and the weave. We've got earnings, actually a number of which came out really poor. We've got volatility. We had Tesla come, we had Google. We had things where, and it started, and so I started wondering whether maybe I'm actually wrong. Maybe there is some fragility in the market, and it still could be the case. One day does not a market make. But after speaking to a couple of people, they said, this thing actually started 3 weeks ago. We saw it happen this earnings season. As I told you, we're going to re-navigate away from all the headlines and all the garbage coming out of the White House and all this other stuff that was really affecting the market in a big way, and tariffs and trade and China and la la la. We're going to navigate towards earnings, which they said were going to be pretty solid, but it started with the banks. We had a week or two of solid, good earnings, but really hard guidance. The banks talked about lack of robust loans, deposits, fighting competition and whatnot. And we saw another couple of things. We saw some downgrades. We saw some cat tractor problems. We saw this and that. We saw Boeing down big one day and up big one day. And then we just saw the headwinds of tariffs and what it could be like, right? And now we're starting to eat away some. Well, we had Cardinal Health down 17% today. So we're actually now into the third or fourth week of earnings season, and we're seeing some actually poor earnings. So not only are we seeing poor guidance, but we're seeing poor earnings. So I'm thinking we're down 390. It's 10:45 in the morning, and I've said maybe I am wrong. Maybe this market is going to crack. Maybe it is the sell in May and go away postulate, which we haven't seen for a while, which used to be the template of this market. And then sure as 11 o'clock, Europe closed, this market turned around. It had nothing to do with the tech sector reversal. It had nothing to do with anything except emotional selling, smart money buying. Bargain hunters went out there. They took the consumer staples. They took some of the energy stock. They took up the beat up sectors, and they started buying them, and that reversed the market in a huge way. There's a lot of red in the marketplace. The volume was not bad. We ended up going from down 390 and closing up 5 points. From 11 o'clock until 2 o'clock, we saw the market rally 470 points. Huge reversal. These are real stocks, real money, real reversals going from red to green. That is major. That is emotional selling, smart buying. That is turning that narrative around. We've seen it a couple days this week already. We saw it last week. It was more news-related bop, but it's all, shoulda, woulda, coulda. Looking back at how it happened, you remember a few days ago I talked about we were down 350, and then boom, something happened. They talked about tech stop bleeding, and they turned them around and rallied back. Bottom left to upper right, huge move. Ended up positive in the Dow, Russell off 8, Spiders off 6, small that way, transport's up 31. Fascinating. Tomorrow is Friday. Let's see what happens. We're in the beginning of May. We're seeing money churn and burn. We're seeing some earnings get fragile. We see a potentially fragile market, but we're seeing reversals in the market. Emotional selling, smart money buying, maybe that's it. There's some value still here. We don't know. We'll see what happens tomorrow. Very telling day tomorrow. NYSE Einstein, inside Verstappen from the floor of the New York Stock Exchange. I'll see you tomorrow.